Good morning, everyone. Welcome back to the channel. I'm your host, Dave, and it's January 26, 2026. Another beautiful day to talk about what's shining bright in the markets. Today, we're diving into how much farther can gold go. Gold has been on an absolute tear lately, smashing records and turning heads. If you're an investor, a collector, or just curious about where this precious metal is headed, stick around. We'll break down the recent rise, the drivers behind it, and what the future might hold. Let's get into it. First off, let's set the stage with where gold stands right now. As of this morning, gold is trading around $5,074 per troy ounce. That's a fresh all-time high, surging past the $5,000 milestone just today. Just a few days ago on January 23rd, it was at $4,941, and it's climbed steadily from there. Looking back, 2025 was a blockbuster year for gold, with prices soaring about 64% annually, one of its strongest performances in decades. From the end of 2024, when it hovered around $3,000, to now breaching $5,000, that's a massive rally that's outpaced stocks, bonds, and even crypto in some stretches. So, why has gold been climbing like this? A few key factors are fueling the fire. Number one, safe haven demand in a world full of uncertainty. Geopolitical tensions. Think ongoing conflicts in the Middle East, trade wars heating up with new tariffs, and global economic jitters have investors flocking to gold as a reliable store of value. It's not yielding interest like bonds, but in shaky times, it holds its worth better than paper assets. Second, central banks are buying gold like it's going out of style. Institutions from China to India have been stockpiling reserves, adding hundreds of tons in 2025 alone to diversify away from the U.S. dollar amid rising debt levels and currency volatility. This institutional demand isn't slowing down anytime soon. Third, interest rates and monetary policy play a huge role. The Fed cut rates twice already in early 2026, with more expected if growth slows. Lower rates make non-yielding assets like gold more attractive compared to bonds or savings accounts. Plus, ETF inflows have been massive, with investors pouring money into gold-backed funds as a hedge against inflation and potential recessions. Now, the big question, how much farther can gold go? Analysts are split, but the overall vibe is bullish with some caveats. On the optimistic side, J.P. Morgan sees gold pushing toward $5,000 by Q4 2026, potentially hitting $6,000 longer term, driven by continued central bank buying and investor demand. Goldman Sachs recently upped their forecast to $5,400 by December 2026, citing hedges against economic risks. HSBC predict a peak around $5,050 in the first half of the year before settling to $4,450 by year-end, factoring in trade tensions and volatility. ANZ agrees, expecting it to trade above $5,000 early on. But not everyone's convinced it'll keep skyrocketing. The World Gold Council warns that if the economy stabilizes and rates don't drop further, gold might only see moderate gains or even consolidate between $4,000 and $4,500. Some forecasts, like from Investopedia, peg an average around $4,000 to $5,000 a year, with risks from a stronger dollar or resolved geopolitics pulling prices down. Beyond 2026, into 2027 and later, bolder calls like $6,376 aren't out of the question if uncertainties persist. In my view, gold's structural bull run has legs, especially with debt piles growing and the world feeling unpredictable. But remember, this isn't financial advice. Do your own research and consider diversifying. If you're holding gold, congrats on the gains so far. If not, it might still be a good hedge, but watch for pullbacks. That's it for today's morning update. If you enjoyed this, hit that like button, subscribe for more market insights, and drop a comment. Where do you think gold ends 2026? I'll see you tomorrow. Stay golden.